Welcome to our webinar, the first webinar in the series here. Today we'll talk about market sentiment. Before we dive in though, just a quick disclaimer here, this is for educational purposes only. As you all know, trading is a risky business, so please be careful with your money, especially these days right now. Market has been extremely volatile. Okay, so today we will talk about market sentiment. So what is market sentiment? And we'll take a look at why do we care about market sentiment, how do we trade the sentiment to grow our account, and then we'll go into Q&A session. So so market sentiment essentially is what we also refer to as a risk on, risk off environment. So risk right now, the risk environment is very, very important. And it's the risk environment that creates the market sentiment, or they are basically interchangeable words that we use for what's happening in the market currently. So risk appetite, first of all. So risk appetite, when we talk about risk appetite, what is risk appetite? This is one way that we use to gauge an underlying trend in the market. So we're looking at what is the risk appetite? How are the investors feeling about risks? Are they interested in taking risks? Are they not interested in taking risk? What's going on? And this is more the emotional side, or this is why we call it the sentiment side of the market. So this is not based just on the fundamentals or on technicals. This is the next level, or the third element that we have to pay attention to. And the reason we want to know about this, the reason this is important to us, is because it allows us to align our trades in the direction of the market sentiment. So it is so much easier to go with the flow of things. So let's say you are basically swimming down the river. It would be so much easier if you go with the current than if you were trying to fight the current. So this is why, if we understand what the market sentiment is, then we can just get carried away with it and be able to profit from it. So in the risk sentiment, there are two different things that we talk about. There is risk on or risk off. So when we talk about market sentiment, we are looking at stock market. So I have mentioned several times, especially recently, we have talked about the risk environment. Excuse me. Especially recently, we have talked a lot about this risk on, risk off environment, and the reason for that right now is with everything that's going on in the market. So with the COVID, what has happened is all the central banks around the world essentially are doing huge stimulus packages. So they are putting money into the market. So we have a monetary policy stimulus, fiscal policy stimulus. So I will cover those in the next webinar that we do. But for now, just understand that the governments and the central banks are pouring a lot of money into the markets right now. And that has created this risk on environment where the market participants, the investors, are very optimistic in terms of what they think will happen with the market. So because the governments and the central banks are supporting the market, it's a risk on environment at this point. So right now, or as we have seen in the recent weeks and months since March, essentially, that the investors are feeling optimistic. They feel good about the future prospects of the economy. So market sentiment generally tends to lead the market moves. So it's the sentiment that starts that market move, or has started that market move recently. So right now, we know that economies around the world are still shut down. So we haven't fully opened. I'm here in Canada. We are slowly starting to open things, but if you were to go to the mall or walk around and take a look, people are still concerned because we don't really have a cure for this disease, and there's no vaccine that has actually been developed and properly tested, and it's out there for common use. So right now, things are very concerning, and consumers are concerned. But what has happened is the investors, on the other hand, are always forward-looking. So investors are looking ahead and saying, okay, because of all the loans that are going out to government, going from the government to the businesses, that will help the businesses sustain themselves. And as the consumer demand comes back into the market, those businesses will then be able to sell their products and make revenues, which will then help the whole economy. So they'll be able to hire people, they'll be able to basically start the economy. And as a result of that sentiment there, we are seeing that investors are buying stocks. So right now it's all about the stock market. So if we take a look at it, so let's take a quick peek at what's going on in the stock market, just so that we are on the same page. So looking at the stock market, I will pull up my S&P 500. So today, this here, we'll talk about, this is a risk-off mode right now. And we'll get into that in just a second. But if you take a look at it from March onwards here, we see this one-way street with the market. So it's just been upwards here. This is S&P 500. If you take a look at NASDAQ as well, as we can see here, it's just been one way. It's been a risk-on environment. Everybody is interested in buying stuff. So we have seen Amazon has doubled in their market size here, market cap. Tesla has gone through the roof. A lot of these companies, Microsoft has gone up. So a lot of these stocks or these companies are doing really well. Their stock is doing really well. And all these different indices that we are looking at here, these are basically combination of stocks. So we're not looking at any one stock, just looking at the overall combination of stocks. We are seeing that the markets have done well overall. So now though, and taking a look here, so in February, we were at all-time highs. So after our 2008, 2009 crash, if we go to the monthly here, so this is a monthly chart, we see since October 2014, that's as far as this chart goes here, it has been one-way trend here. And as we can see here, we did see this drop here back in, actually let me go to the daily here. So we did see some drops, but overall here, market has just been going in one direction. So this is where we saw that big drop in February, January, February, and in March, market started going up. And so it not only did it come back to where it dropped from, it actually exceeded it. So now it seems like we have too much of that optimism in the market, because if we currently take a look at what's going on, the number of COVID cases are going up across the world, but especially in the US, and we have seen Singapore numbers go up, Tokyo numbers are going up. So in different places, the COVID numbers are going up, which means, especially if you take a look at the US, we are seeing that there are more restrictions being put into place. It's disrupting the plans for reopening of the economy, and that is all negative information. So far, the information was all positive. And this is why, because of that positive optimism, we were in risk-on environment. So in the risk-off environment, investors feel good about the future. They will take their capital and they will speculate on the stock market. And this is why I've been saying over the last few weeks and so forth, I've been saying we need to look at the stock market, what the stock market is doing, and then align that to our trading. And we'll take a look at how that works. But usually it's the stock market that will show us what the market sentiment is, and that will then be reflected in the forex market as well. So when we are looking at market sentiment, make sure you take a look at the stock markets, and generally you will see, for the most part, they have been moving in the same direction. So basically, people are putting money into the stock market when we, because stock market is where investors will get higher return. And then when the stock markets are going up, we will also see that our high yielding currencies, our Australian dollar, New Zealand dollar, these currencies that are tied into that market sentiment have been going up as well. So if we go back to our charts here, let's take a look at Aussie here. So over the last little while, since March here, we have seen that Australian dollar has gone up with the stock market. So this is where it dropped in March, in February. So this January, February is when it started dropping, when the market started dropping. And as the market has recovered, this has recovered as well. So Australian dollar and New Zealand dollar are very much tied into the stock market. So one thing to look at is when you're trading or when you're looking at the market sentiment. So if you see that the stock market is in risk on mode, that means it's going up because investors are putting money into it. You will also notice that our Australian dollar and New Zealand dollar will be going up. So that's a relationship we want to keep in mind because both of them will be going up at the same time. So in the risk on mode, just like I just said, we have stock market would be going up, and the pairs that we want to look at would be Australian dollar. We would be looking for an up move. We'd be looking for New Zealand US dollar up move, and we saw that on the charts. Both of those had been going up. Euro yen will generally go up as well. So actually, just overall, yen crosses in general will go up. So if you take a look at our yen crosses here, we'll notice that since March here, so this is where, although euro has had its own issues, but let's still take a look. So we did see this drop, and then we saw this full recovery, and now we are into that double top type of environment here. But this whole thing recovered, and not only did it recover, it went past the high that it had. So there was a lot of market optimism, a lot of people basically wanting to invest in the stock market, and that's why we have seen all of these go up. So generally, when we are in a risk on mode, our dollar crosses will go up, our yen crosses will go up, and our Swiss franc crosses will go up. So all of those would go up. And today we are actually seeing the opposite of that. But during the risk on, dollar CAD would actually drop because US dollar gets weak, and because of the weak US dollar, we see dollar CAD drops because Canadian dollar strengthens and US dollar weakens, so we see this drop. Euro Aussie in this case is stronger, and Euro would be weaker between the two because we saw that Aussie is directly related to the risk on environments, or it goes up when the market is in risk on, and this is why, just like the Canadian dollar, so Australian dollar strengthens, which means Euro weakens against the Australian dollar. That's why Euro Aussie would drop. Same thing with pound Aussie. In this case, Australian dollar will be stronger than the British pound, and this is why we see pound Aussie generally drop. So anytime when we look at stock market going up, you want to look at your corresponding pairs in the forex market. So we're looking at Aussie, New Zealand, we're looking at yen crosses, dollar crosses going up, yen crosses going up, and our Swiss crosses going up. And then these ones here, these crosses will actually be dropping. So euro, pound, basically they're weaker against the Aussie and New Zealand. Same thing will apply to pound New Zealand, euro New Zealand. So next time, or when you go back to your computers or your charts, take a look at these. You'll see that they have been moving with or in the direction that we are talking about here. Now, risk off. So what is risk off? Risk off environment is when the stock market drops. Now, the reason it's called risk off is because this is when the investors are averse to taking risk. They don't want to take risk. They would like to avoid the risk. And this is when they start selling stocks. And as they're selling stock, we see that money flows out of the stocks. And we also see money coming into like US dollar or other high yielding currencies or safe haven currencies. In the risk on mode, our carry trade, which is generally your Aussie yen trade, for example, that will not work. We see it goes in the opposite direction. So risk off mode, like I said, is when stock starts to sell. And this is what we are coming up to now. We are just in that beginning stages where we have to start paying attention to the market here, because we may shift into risk off mode now. So as like I said, market has been going up for quite some time, but now we are at that inflection point where it's been overstretched now. So all the positives that were in the market are all priced in at this point. Now, the reasons why the market was so optimistic now are looking a little excuse me, the reasons why the market was so optimistic are looking a little weak now. So one of the main reasons the market was going up or investors were expecting companies to do well was because of the expectation that the economies will open up around the world. However, what we are finding right now is that this is an extended environment. This is not something that we have experienced before. Totally unprecedented time. Last time we had something similar was when during the time of Spanish flu, and that lasted 2 years. Now we are theoretically in a better place in terms of science. We have made lots of progress in science. We have made much, so much progress in terms of the sanitation and how we do stuff, how we take care of our health, healthcare system in general, things that we do, cleanliness and all that kind of stuff that we are basically looking at the mortality rate. Spanish flu had a mortality rate of about 10%. So there were about 500 million people who were infected with Spanish flu, and about 17 to 50 million is what they say that actually died as a result of that. So if we take the higher figure, 50 million, so out of 500 million people, 50 million people actually died of the ones that were infected. So currently, with the current COVID numbers that we are seeing, we are at about 15 million COVID cases currently. And of that, we have seen 620,000 people have passed away as a result of that. Now, I mean, there's lots of problems with this whole, not all numbers are getting reported and all of that, so we will ignore all of that. But basically, based on those numbers, we're looking at about 4% mortality rate. And considering we are in the modern society, that number is a little high, and we're nowhere close to vaccine being produced. The earliest a vaccine can be available would be end of this year, but it looks like for it to really come to the market and be stable, we're looking at about mid of next year. So that means we are going to be in a bit of a prolonged environment where people are not going out as much, people are not spending as much money, people are reluctant to make big purchases. And that means that the economy cannot be back to where it was. So initially everybody was thinking, oh, we are past this, we're good, let's open up the economy. So things will still open up. I mean, we can't just stay home all, forever. So things will still open up, but people, and just from personal experience as well, I'm seeing that people are not partying as much, or at least, outside of the younger generation. Most people are taking precautions, and so we're seeing that supply chains are also broken. I've gone to some of the stores and there's no stuff there, so it will take much longer than anybody had expected. this thing to take. And as a result of that, we're likely to go into risk-off environment because that whole elastic band has stretched too much in one direction now. So that's one thing, the expectations around when the economy will open and when people will start spending money. That's one thing that's not happening right now. Another thing is, though, employment is not looking like it will be back to pre-COVID time levels anytime soon. So that may take a few months for employment to actually go back, which means people will not have as much money coming in. So we're back into the whole, people are likely not going to be spending as much money. Plus, people can't travel anyway. So right now, the flights are not fully open between different countries. People are, again, reluctant to travel and all of that, which is going to have a negative impact on the economy and more of in a prolonged way. And then one thing that is sort of been on the back burner, which may start coming to a forefront soon, would be US and China trade relationship. So last year, as you may be aware, it was all about an US and China trade relationship. The trade one, or the phase one trade deal, was so important. It was all hyped up. Excuse me, and everybody was so excited about it. But now, just recently, what we have seen is that US has put sanctions on China, and there are certain companies that are likely to get delisted. And just recently, it was yesterday or day before, where US basically closed one of the embassies, Chinese embassies in Houston, I believe it was. So what China did last night, we saw the comments. China closed one of the embassy offices in China, or the US offices. So there are 5 of them in China. So one of them is being closed. So they're doing tit for tat. And if this sort of trend continues, so basically the trade deal is all done now. There's no more trade deal. Nobody's going to really keep their side of the deal. So the trade deal is dead. And if the problems escalate between US and China, we are likely to see more of that impact. So right now, market has been ignoring all the growing COVID, the delay in the economy, opening up the economies and all of that, because there was too much optimism. But as the reality sets in, we are likely to see market go into the risk-off mode. So this is the first, if we take a look here, this is the first time we have really seen any sell-off. So this was the last time. And then since then, this is the first day. And now we are not in risk-off yet, but we may go into risk-off here. So this is where we have to be prepared. And this is where understanding the market environment becomes very important. So risk-off mode, again, is where people are selling stocks, and they are basically getting concerned, and this is why they're selling their stock. And actually, another thing that came to my attention, I was looking at Bloomberg last night, and in their evening brief, they mentioned that a lot of these executives of the companies that have been making a lot of money, so we're talking about the big companies, Amazon and things like that, they are seeing that the executives are actually selling their stock. So they were buying the stock back in March because the stock, it was cheap. Now they're actually selling it. So this shows that we may be coming up to a turning point. So again, we are not in risk off yet, but this is where we have to start looking for opportunities. So please don't go sell right away, but be aware of it. Keep an open mind to the market turning. So last time, before the market dropped off, there was similar news that had come out about executives or insiders in the company actually selling their stock. So when the executives sell their stock, they have to disclose it, and those are the requirements. So this is how Bloomberg knows who is selling and who's not. So they are saying that a lot of these executives are bailing out of the stocks. They're selling the stocks and getting cash in their pockets. So all those factors are some of the reasons why we may see a risk-off environment. So let's take a look at what happens during the risk-off environment. When we see a risk-off environment, stock market will drop. So again, it looks like it's at that inflection point. It hasn't completely sold off yet, so we need to see some swing points taken out before we can truly say it's in a risk-off environment. Right now, the trend is still upwards, but we're starting to see those cracks in the foundation there. So, what happens? So, what do we need to do? We, like we looked at, Australian dollar and New Zealand dollar will drop. So, if you take a look at it today, looking at our Aussie, see how Aussie yen has dropped. So this is 1 hour chart. Let's take a look at the daily chart. See, Aussie yen has dropped. And if you take a look at New Zealand yen, look at this drop in New Zealand yen. So Australian dollar and New Zealand dollar are both directly tied into the market. So I'm looking for price to come into the 70-70 area. And if it goes through this area, then we're likely to see we're likely to see the sell-off start to happen. So this is just one day. One day doesn't quite make a risk-off environment. It's just a short-term risk-off environment. But to really see if the market will do one of these, that hasn't quite happened yet, but we are into the initial phases of potential risk-off environment. But today, we are definitely in that. So we're seeing the selling here. And if you compare it to S&P 500, take a look at the daily chart, we see exactly the same thing here. So nice bearish candle here, nice bearish candle on Aussie yen. So nice. So both S&P 500 and Aussie yen moving in the same direction. Same thing here, New Zealand yen dropping, same way as S&P 500 was dropping. Now let's take a look at Aussie dollar and New Zealand dollar. So here's our Aussie dollar. As we can see, Aussie dollar is dropping today as well. And so is New Zealand dollar. So we are seeing a drop here from New Zealand dollar as well. It's starting to look like a pin bar here. So we'll see how it closes. Now, again, price is coming into support and all of that. So it's not completely turned yet, but it is in the process. So this is why we need to pay attention to that, because Aussie dollar, New Zealand dollar, Aussie yen, New Zealand yen, all of these will basically move in the same direction as the stock market. So going back to our presentation here, as we saw, Aussie dollar, New Zealand dollar will drop, Euro yen will drop, and pound yen. So basically all the yen crosses also drop when we are in a risk-off environment. So let's take a quick peek at our yen crosses. We already saw that Aussie yen and New Zealand yen were dropping. We have similar moves that we are seeing in the stock market are being reflected on the charts as well. So taking a look at dollar yen, for example, that's dropping. Euro has had some things happen recently with the bailout package being accepted by everybody. So Euro is a little stronger, but let's take a look at pound yen. So pound yen is coming down as well today. Let's take a look at the daily. So here we see that pound yen is dropping. So basically yen crosses will drop, but Aussie and New Zealand dollar are the two that tend to move quicker. And as we can see, there's a difference between Euro yen. It has dropped a little bit, hasn't really done that much. It's just been range bound. But if you look at Aussie yen, there's a definite shift to the downside here. Same thing with New Zealand yen as well. So keep those in mind. Okay, and then we also have dollar CAD would be going up, Euro Aussie, and Pound Aussie would be going up as well. So let's take a quick peek at the charts. So we said Euro Aussie. Actually, first let's take a look at dollar CAD. So we said dollar CAD should be going up. Let's see if it is. It has pulled back, so going to the dollar. So it is going up right now. So the stock market is dropping, and dollar CAD is going up. Now, Canadian dollar has been strong lately, but still, this is being reflected. So we saw Aussie dollar dropping and dollar CAD going up because US dollar is getting stronger. So our safe haven currencies will get stronger, which is our US dollar, Japanese yen, and Swiss franc. So all of those would get stronger. Okay, so let's take a look at Euro Aussie and Pound Aussie. Euro is strong right now, so let's take a look at Pound Aussie. So Pound Aussie, we said, should be going up. As see, Pound Aussie and Euro Aussie, we said they should be going up. And as we can see here, strong move up in our Pound Aussie and Euro Aussie as well. Strong move higher here in Euro Aussie and Pound Aussie. So this is actually a good time for this webinar because we are right in the market situation where things are literally turning in front of our eyes. So we are seeing this strong push higher in Euro Aussie, Pound Aussie, and if we go back to our S&P 500, we are seeing this push to the downside. Same thing with NASDAQ as well, pushing to the downside here. And then if you take a look at Dow Jones is dropping as well. So this is currently in a risk-off mode. So this is in a risk-off mode. Again, I want to clarify today, right? This is a short term. And now for it to become a long-term trend, we just need to see a sustained move. So once it breaks through the support level, then we basically start looking for move lower back into these previous areas here. So today is the first day. We need to see a close below this. But again, like I said, we are at that inflection point where this becomes very important. So make sure you look at these crosses. So when you're looking for trades, these are the crosses that we want to be looking for our trades in, because those are the directions that we are looking for. So risk-off environment, basically, just to recap, stock market is selling off. So our Aussie dollar, New Zealand dollar is selling off, yen crosses are selling off, money is flowing into our safe haven currencies. All right, so that's our risk on, risk off mode. This is another way of talking about it, or calling it, is risk sentiment or market sentiment. So market sentiment, like I said, is very important in our trading, especially right now because everything is so focused on the stock market. So we have to be aware of what's going on in the broader market, and that can really help us with our trades. So currently I am in a couple of trades here. I am in pound yen, pound dollar. Let's see actually how those are going. Let's see, what am I doing here? Pound yen, it is coming down slowly but steadily. There isn't, yeah, it's trying. Aussie yen, I kind of missed the opportunity to go into Aussie yen. So this one hasn't quite done anything. It's still up top here. So I kind of missed the opportunity of going into Aussie and New Zealand. I wasn't looking at it at the time. So we'll see how that goes. Any questions? Or anything to add before we wrap things up? And if there are if there are any other topics you want me to touch on in the future, please let me know. All right, so that's it. So no questions. I hope you guys, this made sense. So this is not just because of China, because of many different things. So Remy, we're looking at essentially the markets being, the economy being delayed because of second wave of COVID that we are seeing, an increase in number of infections. So it's not, the scope or the optimism around opening up of the economy is not quite there. China is a big issue. Trade relationship, I should say, with the China is a big issue. So a few different things, and the market's also extended, and we are seeing that the insiders are selling. So all those reasons are reasons as to why, where we are. The last 2 days, is not like I said, we're at that inflection point right now. So it hasn't quite turned. It looks like it may be turning. So if you take a look at the daily chart, let's see if we go to S&P 500 on the daily, we will notice that market hasn't done anything over the last few days, and even now it's struggling. So it's not, today is a risk off day, but it is not, from the long-term perspective, it hasn't really turned yet. So we need to see it, realistically, we need to see it break this support level, which is at about 3,000 before it would drop. For now, though, in the near term, we are looking at 3220 level on S&P 500 to see if it can sustain below that. Then essentially we're looking for a move lower. First would be 3120 and then into 3,000 level. So that's where over the next few days we'll see how it goes. Like I said, it's not quite there. It's getting there though. Any other questions? The sentiment will work with scalping as well. So when we're doing a shorter term trading, what we want to look at is going into a smaller time frame. So for example, looking at the 1 hour time frame here, we see that S&P 500 is dropping. So if you go to Aussie yen, for example, take a look at the 1 hour, you will see a similar move there as well. So if you wanted to go even lower into a 15 minute, see how this is dropping. Aussie yen is dropping right now. So if you go into a 15 minute on S&P 500, you will notice that S&P 500 is dropping as well. So I would look for these ones, the indices, to lead, and then Aussie yen and New Zealand yen to follow. See how right now we're looking at S&P 500 and it is dropping currently. So it's into support. So we need to see, this is the support it's struggling with right now. So it needs to break the support to continue. But if you take a look at Aussie, it's doing exactly the same thing. See how it's struggling with support here, and it's trying to, it looks heavy. It's trying to break. So if the S&P 500 breaks the support here, then we're likely to see this follow as well. So basically, if you wanted to do short-term trading, whether looking at the risk sentiment, is totally doable. Basically, you're just looking at a smaller, shorter time frame on both of those, both the stock market as well as the your currency that you're trading. For my time frame, I am looking at 1 hour. I'm not trading the shorter time frames as much anymore, just because I just don't want to be in front of the computer very much. So with the pound yen trade, the reason I am looking at this is because of the double top situation here. So we see a double top, see how price went into resistance, and then we have a double top, and then we had a nice pin bar here. So there's a double top, there's the pin bar, and now I was looking at 136.40-ish area to hold. So it dropped through its holding. So I'm looking for price to drop into this 135.80 and then potentially into 135.40, and then we'll see how it goes from there. But if it starts to shift around, then in these markets, I'm finding that my longer term swing trading is not working as much. So it's because market keeps switching back and forth. So shorter term is probably a little bit better. And Aussie trade would have been Aussie yen, would have been a really good trade to take. If we take a look at the 1 hour on Aussie yen, we have a double top, but we have a lower high, and we have a nice bearish engulfing candle close here. So this shows that the momentum is to the downside. So technically this is a better trade to take, but pound yen is okay too, because it is double top. It's just not moving as well as the Aussie one is moving. I hope that explains what I was doing with those trades. Any other questions? Can we have more webinars in the future? Yes, absolutely. I was just saying before we started here, we'll start doing weekly webinars. How about that? I was thinking bi-weekly, but we'll start doing weekly, and we'll focus on more of this type of stuff where it's hard to find this information. Okay, perfect. All right, so looks like that's it for now. So you guys have a wonderful wonderful rest of the trading week, and we'll do this again next week. So we'll set Thursday as our day for the webinar. So if you would like to join me again, just keep an eye on the email, and I will send out the email. Okay. All right. So you guys have a wonderful day, and I will see you later. Bye for now.